Hi there. My name's Matt Rushing. I'm with the AGCO Global Crop Care team, a team focused with agronomists and machinery specialists on AGCO's crop protection, nutrient management, soil preparation, and planting equipment. I'm excited to be here in Chillicothe, Ohio, talking to you today about the exciting, educational, and informative events that we're putting together here locally on the Brown Farm. We're working on how we can show you the new Fendt Momentum planter and how well that machine performs in the field.
Well, thank you, and thanks for your work there and the crop care. Tell me about what the point of the program is. What am I going to get if I watch the virtual event from Ohio?
Yeah, I think one of the things that we're really focused on here is education. We want to create some of the, recreate some of the things that you would normally see in the field, maybe as mistakes or machines not set up correctly, and demonstrate to farmers the effects of those mistakes or machines that are not set up correctly in the field. We're able to show you what those mistakes can cause or what effects those mistakes can cause in the field and show you ways to correct them.
Many farmers may already be familiar with the crop tour. How do these fit in with the crop care program? What's the difference there, the tour versus crop care?
Yeah, we have basically two types of crop tours. One's very focused on planting and how making improvements in your planting program can, or your planting application can be much more effective and much more profitable on your farm. But also we're focused now on crop protection as well. So we're starting to look at how you can also set up a sprayer or an applicator to be more effective on your farm and drive additional reductions in waste and improvements in yield.
Fantastic. Anything else that a farmer should know about these? I mean, what's going to happen? It's going to be virtual, right?
It's going to be virtual, and we've been doing these now for about 5 years, so we've got a lot of information that we've pulled together over that period of time that we're able to share and extend our education, extend what we've learned out to the farmer.
Well, great. Well, thanks, Matt Rushing from AGCO, and we look forward to learning more from the crop tour and about crop care. Appreciate your time.
Thank you.
Hi, this is Willie Vogt with the Farm Progress Virtual Experience. Welcome to our first marketing breakout of the session on day one here. I'm with Bryce Knorr, who's a contributing market analyst for Farm Futures, still writing a weekly column for the magazine as it is, and you might want to check that out. Today, we're going to talk about who's got grain. And Bryce, I'm just going to let you take it away, and I'm going to listen and ask some questions at the end.
Well, thanks, Willie. Again, one of the big questions is who's got grain? Do we got it? Does the competition have it? And it's really creating a uncertain price outlook right now. Of course, in the U.S., drought and derecho have devastated crops in some areas. USDA cut their acreage estimate for corn, but not by very much. More could be in the offing as we look forward. The crop ratings have really plummeted since August, losing double-digit losses according to my yield models based on them. So the size of these crops is still very uncertain. Now, USDA's September crop report put the yield at 178.5. That's basically just the trend yield it's been using for much of the year before August. The closest method that I used was the weather model based on July temperatures and precipitation, planting progress, and stress during June. But you can see that those crop ratings are significantly lower. Now, when we look at total bushels, USDA just 1 bushel under 14.9. The vegetation health index was the most accurate, but again, those crop ratings are perhaps suggesting that further reductions may be forthcoming down the line. Now, soybeans also saw a drop-off in the ratings, not as dramatic as in corn, holding up a little bit better. USDA in September, 51.9. That's right at the midpoint between the two crop ratings methods that I used. Again, the weather model for soybeans, and that took into account The dry weather we had in August, much lower, basically 50 bushels per acre. So there is some uncertainty as to just how big this soybean crop is. Now, in the production estimate, USDA about 4.3 billion bushels. Again, that's the right at the midpoint between those crop ratings estimates. Some of the other models, again, are lower. So we may have to wait till the combines really start running to find out how big these crops are. Now, we had a trade war with China, I guess still going on, but we certainly, frosty relations cloud the outlook for soybeans particularly. We got a ban on TikTok that's causing a lot of angst. The U.S. has blacklisted Chinese technology firms. President Trump says he wants to decouple the U.S. economy from China. We've put sanctions on Hong Kong officials due to what they've been doing to the protesters over there. Human rights abuses also coming in for criticism. We've had tit-for-tat to embassy closings and more of that going on just last week in Hong Kong. Confrontations over the South China Sea, actual military sort of dust-ups. We've been kicking out and limiting journalists in both countries, and still uncertainty as to whether or not the phase 1 trade deal is going to work. Now, under that trade deal, we're supposed to be doing $36.5 billion worth of ag sales in the 2020. Now, this is the 2020 calendar year. Through July, that's the only data we have so far. We've only done 8.6 billion, so still a long ways to go. Now, in August and the first part of September here, of course, the Chinese purchases of particularly corn and soybeans really picked up. Now, the highlighted in yellow here are some of the bright spots in that January through July data. Basically, the meat products, the swine flu, and some of the problems they've been having over there caused them to really step up their imports of meat from the U.S. The accumulated sales to China have really risen dramatically over the past month or two. Soybeans, of course, leading the way, but corn also higher, sorghum also doing quite well. The soybean commitments at the start of the 2020 marketing year are an all-time record. Now, that doesn't necessarily mean we're going to be setting record exports when all is said and done a year from now, but certainly off to a very good start. Also, remember, those are sales as well as shipments, so it doesn't necessarily mean you're going to ship out all that soybeans, particularly if the trade war heats up again. Chinese soybean overall imports really nosedived when they locked down for the pandemic. They've started to return towards more normal levels. Now, this time of year, as we head into the U.S. harvest and the end of the calendar year, is really when the U.S. Tends to dominate the export market. Right now, we're pretty much the only store in town. Brazil is sold out. During the trade war, of course, our exports to China fell off to nothing. Brazil benefited from that. They had very good exports to China from their old crop. And the question is now, is Brazil going to give up that Chinese market? Most likely not. Now, exports are really the smallest category of corn demand. That's those yellow bars there, but they tend to be the swing factor that can really drive prices up or down. The corn commitments at the start of the new crop marketing year, also an all-time high. Now, for corn, this is still pretty murky, however, not a real good relationship between this fast start and what we wind up with down the road. What really tends to matter with corn is just how much of the world's exportable supply we have. That's our share of the exportable supply has been going down as other countries have started growing corn. And as a result, our share of the world export market has also tended to drop. Now, again, looks like it could be a little bit higher here for 2020, again, depending on just how big that corn crop is. Because more supply equals more estimates. In 2012, we had a bad crop. Our weekly export sales on average were quite low. 2017, well, we had a much bigger share, and our exports were very strong. Now, one thing that doesn't affect corn exports is the value of the dollar. A lot of people say it does, but when you look at the data and run the correlations, there's no correlation between the dollar and what we actually sell in the corn market. Now, ethanol, USDA lowered its estimate of corn usage for ethanol in the September report last week. That was in line with what my forecasts have been showing. Of course, ethanol demand just plummeted during the peak of the lockdown for COVID. It's since recovered, but is still quite weak. People just aren't driving as much yet. So overall, the ethanol prices have bounced back from the very low levels, but they're still relatively low. They're not what we need to really make money. The margins that plants are producing right now really aren't very good. So not a whole lot of incentive to push production and purchase more corn until people start deriving again. So overall, it looks like we'll be better than in 2019 marketing year, but likely not by all that much. Feed usage also going to be improving here once again. I'm not as optimistic as USDA. However, we do have more chicken, so they're going to be eating more corn. But again, they tend to have a much higher feed efficiency than pork or beef. Milk production is up, but prices have been hurt because kids aren't back in school, and we also aren't exporting the non-fat dry milk that we normally would. So milk prices are down in the dumps, starting to hurt margins again. Now, hog producers, this is the pig crop for the first part of the year, and they expanded dramatically, hoping to capture the Chinese market, not only due to the trade deal, but due to the lingering effects of swine flu on the Chinese hog herd. However, the prices crashed when the slaughtering plants here in the U.S. Closed, so margins were terrible. They should start to recover now as the sales pick up. Also, the big news last week was the swine flu outbreak in Germany. We don't know if this is going to be the real deal or not, because it was just found in a wild boar, but hog prices rocketed higher. And that could be, if that situation plays out and countries start to ban Chinese pork exports, that could be good news for U.S. producers. Cattle placements, of course, plummeted during the peak of the COVID outbreak. They've started to bounce back a little bit, but the calf crop is lower. So overall, I'm not as optimistic on the beef feeding of corn as we might hope for. A lot of red ink has been flowing, not just this year, but for the last couple years for people trying to feed out steers. And it's unclear as to whether or not that situation is going to improve. Cattle futures have recovered somewhat from the drubbing they took during the COVID crisis. But recessions, and we're going to be in one for perhaps another half year or longer, and when people don't have as much money, they tend not to eat as much beef. These are the grain-consuming animal units, so it looks like they're going to be down slightly for this coming year. That's one reason why I'm not optimistic about increasing feed usage as much as USDA projects. Also, if we have higher corn prices, you tend to feed less corn. Now, for soybeans, the crush margins have bounced back after breaking this spring. They're still not as good as they've been over the past couple years on average, and that's something we're going to have to watch now because we've been having a very strong crush. As to the strength of that crush could depend on what happens with the crop down in Argentina that they'll be planting here in the next couple of months. Argentina is the world's largest exporter of soy products, and they tend to have trouble when there's a La Nina. That's the cooling of the equatorial Pacific, and that's the phase we're in now. It doesn't look like it's going to last to the U.S. growing season. It's been associated with droughts in the U.S., but we're definitely in it now. And what that does, that tends to be bad for Argentina, but it tends to bring more rainfall to Australia. So Australia is going to have a good wheat crop and good coarse grain crop as well. A dramatic reversal down under after 3 years of drought. So overall, in terms of supply and demand, I'm not quite as optimistic in terms of where ending stocks are going to wind up. I think the crop may be smaller, and that means usage will probably be smaller too. But in terms of the average cash price, I'm looking for a nickel more than the USDA at $3.55. And what that translates, when you translate that to futures, if we can get some excitement going in the futures market, it means you do have a shot at selling $4 corn, I think. Now, we've seen a fairly dramatic move here in the past month or so in the corn market. We rallied to 5-month highs. Now the question is, can we take it this next leg higher and really get an assault going on $4? That may be difficult to do at harvest. Again, it's going to depend on just how big the crop is and how demand shapes up. For soybeans, again, I'm thinking the crop's going to be smaller, and if it is, demand's going to be smaller. My ending stock's basically the same as USDA, the average cash price a little less, but with that, it says if we can generate some buying excitement, we could see futures breach 10 bucks. We're very close to that now, and perhaps have some significant upside, particularly if China keeps buying and maybe the crop gets a little smaller. Last week, we took a stab at 10 bucks after the USDA report. So we're starting to see some momentum. No gaps on this chart yet, and perhaps if we can get a couple gaps, that could gap higher sessions, that could get us going. It'll be harder to do though, because you tend to get that during the growing season. Now, the one question farmers are going to have to face is storage. It looks like if we use USDA's production estimates, we'll fill about 99% of the nation's bins, depending on just how much was lost due to the windstorm. So overall, storage is going to be a little tighter than what it was last year after the flood. In the eastern corn belt, bouncing back after some pretty bad crops, still not going to be terribly tight, particularly in Iowa. Of course, that's where they've had the most problems in terms of both the loss of storage and loss of crops. One thing to watch in the corn market is the carry. This is the spread between December futures this year and July 21 futures. We've seen that tighten up to about tighter than 20 cents. So we're taking the carry out of the market. And if we continue to lose that carry, that's an indication the market's starting to get nervous about supply. It could affect your storage decisions, however. And so you want to be looking for buyers who are getting nervous and maybe start locking up some basis if you can. Now for soybeans, a complete reversal from last year during the trade war. We had November, July carry in the bean market above 50 cents. Basically, we've inverted now. November trading for more than July 2021. So we're back to where we normally are. The market wants those soybeans now. It wants to move them out. So we should see a pretty strong soybean basis eventually this fall. So if you have any questions, Willie, be glad to take a stab at them.
Great. And I assume we'll look on the side here for comments too as this rolls through, and you'll be on answering questions as well on Tuesday with this, today, I guess, with this. But I guess one of the things, you talk about all this, we talk about Brazil, China's such a big customer for us. Is there any indication that anybody else could take some of our product or suck up and create new kinds of demand? I mean, is there any opportunity for something like that?
Well, we continue to see increasing demand out of South Asia, Vietnam, and those countries. They're continuing to buy more and more of our products, but they just can't match the dynamic power of China. So China is a big stick, of course. They wielded it forcefully during the trade war, it's really going to be up to them. USDA raised its forecast of total Chinese soybean imports up to 103 million metric tons, and that's based in part on a continuing recovery in the Chinese economy. The Chinese economy has been going through a few slow years even before the pandemic hit, but now they're starting to grow again. If they can keep that growth going, that would certainly help. But again, the relationship with the US and China are pretty darn frosty right now. So it's looking unlikely that we're going to get a long-term deal. And the big question is whether or not China is just going to walk away from this phase one trade deal, which would really leave the U.S. hanging in terms of that soybean demand.
Yeah, I don't know that we really have the right stick to enforce the phase one trade deal. I actually asked the Secretary of Agriculture that myself, and he said that there are actions that they could take. But we have so many actions going against China now. I'm just not so sure there's any actions left, but we'll have to see how that plays out. You were talking about storage, and obviously the derecho was a big deal. Do you have any sense of how much was really lost yet on the storage in terms of the permanent storage?
Yeah, the estimate that seems to be floating around is about 50 million bushels, which is a big deal if you're one of those farmers who got hit. But in the overall scheme of things, we have about 25 billion bushels of storage here in the U.S. So, it's not a big deal when you look at the overall capacity. So it looks like we will be able to store this crop. They're going to be ground piles, but again, they're ground piles a lot of years. And both farmers and elevators and commercial users have gotten very good at temporary storage, whether it's in the covered ground piles or the more and more farmers just putting it in bags. Of course, that's what they do down in South America for the most part with their soybeans as well. So farmers have gotten used to dealing with big crops and of course, we'd all rather have more bushels to sell because that lowers our cost of production.
Yeah, absolutely. And obviously, the guys that were hardest hit in the derecho area also don't have any corn to put in the bins that aren't there anymore. I mean, it's kind of a double whammy for them. So.
Right, and that's why I think, Iowa, again, they aren't going to be in a serious position. Not only did they have the derecho, but Western Iowa particularly was hurt by the dry weather in July and August.
That's pretty intense. I did hear the $4 corn phrase from you. I mean, are the dominoes lining up to fall that direction, or how do you see it right now?
Well, I think so, but again, we're going to have to get a bit of a counter seasonal rally to do that. And we already have the deferred futures up around 490, or excuse me, 390. So the deferred futures are starting to get there in terms of people who can put on those hedges. But we'll get another production estimate in October, November. Just depending on how fast the harvest goes, we may have to wait until July to see what we finally get. Again, it's much easier to get big rallies during the growing season in June and July. September and October, sometimes they happen. But again, we're going to have to get some surprises either in the size of the crop or in continuing demand, particularly if China finally decides to go ahead and fulfill their quotas. The Chinese corn supplies are dropping fairly sharply when you look at just the total number of bushels. They still have a lot of corn. It's not like they're going to run out, but they're using more for ethanol, and they're continue to use more for livestock as well. So they are going to need to import more corn, and the question is just how much of that is going to come from the U.S.
Well, and you know the chart you showed that exports they're kind of the flex portion for the price. Really, we keep a lot of corn in this country, but a lot of it goes into ethanol plants, and the demand. I saw the production going up. The stocks are still down. I mean, the demand is still not rising. The oil industry's taking it on the chin because we're still not driving. Do you see ethanol demand changing at all in a short term?
Certainly not in the short term. It's just going to be very difficult. Until people start driving again, you aren't going to see very much growth in that. Of course, we've had a lot of the plants shut down, so we have the most efficient, the newest plants that are running right now. The rest are basically either have been sold or mothballed. And even after that, we continue to see electric cars coming online more and more, which is going to cloud the long-term future. So unless we can start exporting it, countries like China could certainly use it. But we have a lot of competition in the ethanol market. Brazil, of course, has become a huge corn producer. Now they aren't going to have another crop there until May, June, and July this coming year. So for the short term, we are going to pretty much own the corn market too, although we have more competition there, particularly out of the Black Sea. They had a few weather troubles there, and as well as parts of Europe. That could also encourage corn export. But again, with the world economy pretty shaky right now, it's hard to be too bullish about demand.
Oh, I know. And when you look at the long-term auto demand, and I think there's a thing that I've been considering as we look at just the impact of the pandemic, not just that people aren't driving, but we actually have even had the conversation around our house. Maybe our second car should be electric, because if we're only going to have one car for long trips and one car for just kind of putzing around town, we don't need two gasoline cars if we can buy a small electric vehicle that doesn't, we don't need to go 30, 40 miles. So I think that people are going to start thinking that way. And I think the long-term picture is going to be very interesting for all of this. Although in the story that ran on Friday on the Farm Progress magazines, the Trump administration has committed to say 15 billion of ethanol is 15 billion gallons of ethanol, and they're going to hold to the RFS. So we'll see how all this plays out too.
Yeah, again, government mandates are not the way you want to go. We all say we believe in free markets, of course, but sometimes they hurt, as we've found out recently.
Absolutely. Well, Bryce, I really appreciate your time and your insight here. This has been a great talk. And tomorrow on the Farm Progress Virtual Experience, you're going to provide the second half of this picture, basically the rest of the story. So we look forward to catching up with you on that. This is Willie Vogt with the Farm Progress Virtual Experience. Thanks for taking part in this breakout session on Who's Got Grain with contributing market analyst Bryce Knorr with Farm Futures. I'm Willie Vogt. Thanks for joining us, those that have watched this. The premiere is over, but you can also share this with friends, and it can be played at any time. Thanks for your time, and thanks for joining us.